Today I'm going to be sharing with you 2 reasons why I don't trade pin bars. Hi there and welcome to the Forex Collective. For those of you who don't know me, my name is Brian and I'm a full-time Forex trader who left my 9-to-5 job a few years ago. I upload tutorials on Forex and I upload weekly free analysis, so if you haven't done so already, hit the subscribe button now so you don't miss out. I also have a subscription service and a challenge for my YouTube channel right now. So if you haven't checked out those videos yet, do it right after this. So pin bars is one of the main candlestick formations that traders use to trade. There's an inside bars, doji or pin bars, and engulfing bars. And those are kind of the main ones that traders look at. There's different patterns with them, but they're kind of comprised of those. So I'm going to show you on my screen 2 of the biggest reasons why I don't trade them myself. Okay, so reason number 1 is pin bars are good for telling you if there's indecision. However, a pin bar will form on any sort of zone or fib retracement or pretty much anything that you can think of. So to me, they don't give a very clear signal. Let's see this right here. So the biggest reason why I don't like them is there's lots of slippage with it. If we look at this red, I'm going to zoom in. This first red doji pin bar, it happened at, a potential double top. If I go into the 4 hour, okay, what's going on? Here we go. Okay, so let me find that. Okay, so we can see the price came up, came down, price came up. This is where that daily doji formed, right at this resistance zone. So it formed right there. Okay, now let's go back to the daily. Okay, zoom back in again, always zooming. Okay, so we can see that price came into there, showed a slightly down bar. So a lot of people would look at entering on that either at the break or something like that. However, what happened next was another doji or pin bar that spiked up and probably took out a lot of stops. So what I find is dojis tell a lot about what might be happening in terms of reversal. However, they have a lot of slippage associated with them. So I like to use other formations that give, a more concrete answer as to, okay, price's top is most likely in. The other thing happened over here. So price came up. This should be down a bit, more like that. So a zone here, boom, 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 boom. Price came up, beautiful, beautiful, beautiful dojis. However, price spiked up with more dojis, possibly taking out stops. So not until a very clear engulfing candle came along did price actually start tanking. So dojis are nice and all, but I definitely don't trade them. I look for other confirmations before I do that. Lots of slippage. The other reason I don't like them, the second reason, is they're everywhere. Like everywhere. Here, there, everywhere. In any trend, whether it's reversals happening or not, in the middle of a continuation, on zones, you name it, on any time frame, you're going to find pin bars and dojis. And for me, it takes up way too much time to analyze every single doji. I prefer to just look at a fewer signals, but have clear entry and stop, strategies with that. So there we go. Those are the 2 big reasons why I don't trade doji specifically. So I'd actually like to hear from you in the comment section below if you trade dojis, and if you have success with them, and if you have any pointers as to what you might do differently to get a winning strategy out of it, or if you use them maybe in combination with anything else. So I'll see you next time.